Just gonna stick some music on. Not this. This is an advert. There we go. Right. So we are short, as I said, and one sec. Why are you doing this? Yeah, so as we see, we waited for the market to set up appropriately, as I outlined in the trade. Like, I didn't do an outlook as such, but I did for Euro, but I didn't upload it real time, not because I was hiding anything, whatever. I just didn't upload it. And but yeah, I mean, I uploaded real time when I was in the GU trade, and I still am. Anyway, it's looking like we're gonna come up a bit higher. But just based on the trajectory of this push, I think my thing's froze. Oh my goodness. So anyway, yeah, the market set up appropriately, and we got short on the. It was this bar right here. Yeah, so we got short right here, and then participants over the next subsequent time periods traded the price primarily lower, and then from this point right here, where the previous buy-in started to come in, participants again came in, and drove it higher. And the way these bars are forming, it is bullish, but like, I don't know, the high time frame bias is still lower. For European and more trend session, like, it's still applicable. But anyway, you can see, for example, the behavior that comprises and dictated the way that this bar formed. So if I'm not sure how to draw. Bloody hell, this is yeah, the pen. So yeah, so this bar, yeah, so opened right here, and it closed about there-ish, basically, right? So this whoops, 2 seconds. Edit, 2 seconds. So if I just get rid of this, remove. There we go. Oh god. None. There we go. This is a new platform for me, so it's pretty hard to navigate. Anyway, I know how to read it because I had previously studied it to understand Mark Douglas's principles. But anyway, as of this bar closure right here, participants then primarily traded with the best bid and best offer in the particular fashion that drove the price down here, all the way down to there. That's reflected in the low of this 15-minute time interval, which was spanning from here to here. And that lowest price is depicted in this bar, but it's like one comprehensive snapshot of this 15-minute time period, right? So, but it's comprised of each of the transactions that went on within this. So if you just look at this, I'm pretty sure it should tell you. It doesn't actually tell you the overall volume traded, but it does tell you the For example, the low was 663 and the low was 663. So that trade transacted at 663, yeah. And anyway, then from this point, participants drove it up to the last traded price that was here. And that closed this, and that resulted in this bar closing here. And then, if you see the way so then the next bar would have opened from here, and it would be moving with time. And then, as you see, participants drove it up. So this would be reflected within the way the bar closed. I'm just gonna get rid of this. There we go. And then crosshair. I'm also gonna get rid of that. That's better. That is much better. What does this do? Time slices. We don't want that. Configure this. Last price, strength level, volume bars. We don't really want these either. Volume dots, we want those. Best bid, best ask. Heat map. You know, I don't even really. I don't. Yeah, I don't even use it, to be fair. So yeah, I'll just turn it off. Buy sell orders, candlestick bars. Yes, we want those. VWAP. Yeah, we're gonna have this on, whatever. There we go. So, nah, actually, I think I will have the heat map on. It's kind of part of bookmap, isn't it? Yeah, okay, fair enough. Anyway, so I think I'll have the data tooltip on now. Anyway, so you see participants drove it up. So this is the, remember these are 15M bars, so it spans from 10:30, and this bar's set to close at 10:45, and you'll see all this data reflected within the comprehensive snapshot being the 15M bar, as you see right here. So like this, traded up to view up, traded down, traded like this, and then the last traded price, where the bar the last traded price of this 15M time period is reflected in the close, being the price that the bar this time period closed at, or reflected in the bar. And the bar itself is reflective of the participant's intent to trade. And as you see, it was primarily with the best offer. Now, I can't really read these charts with anticipatory conclusions, and no, I can't really read these charts and come up with anticipatory conclusions. I just can't, you know, I need to see the bars next to each other. I guess you could to some degree, but, you know, it's not, I don't really like it for that. But anyway, so, yeah, if I just get rid of this line, clear drawings, yeah, there we go, yeah, clear drawings. I should remove it. There we go. Alright. So yeah, I guess if you go like this, you kind of can analyze the trajectory and stuff. Like for example, but like the thing is, right, that I reckon the bars do a better job of depicting the intent to trade over relative time periods than the pure volume dots themselves. Oh, that's interesting. Actually, look at that. Right to the liquidity. Right to the liquidity area where participants were interested since, like, what even is that, 400, bloody hell. Okay, anyway, yeah, so I reckon the bars do a better job of depicting the intent to trade and how that's unfolding. Like, so like right here you see the at-hand push, and just primarily comprised of participants over repeated 15M time intervals participating in the same fashion over like the same time period. So that's a trend, like a trend with regard to participants, how they've been behaving like over 15M time periods consecutively. So they're primarily over 15M time periods behaving in the fashion with the prices that are available on this occasion in the way that's facilitating lower prices. And then anyway, right off here, you see this the order flow that comprises these big bars that formed the way that the behavior that formed this bar forming the way it did. You see right here at 7, they just like that. It's quite too much to be a coincidence, I think. Like, someone was obviously willing done this on purpose. I would say. I would also say that there is. I mean, what was the order book like here at this point in time? Yeah, so it wasn't that. It wasn't that thick, like 27, and then as you see, like right compared to how it is now, we'll just go to yeah. Yeah, so it's quite a bit thicker now, isn't it? So there was just 27 lots and stuff there, so it's a bit cheap. To could drive the price higher. But anyway, uh, what, and also why I say that is like, for example, just because back in the day I would have been confused of like, well, why would you even drive the price higher? Well, it's like if you need to get a certain price, like for example around this region from here or better for shorts, um, and the anticipatory profit is, let's say, like 400 million, right? And then it costs 100 million to drive the price to this region yourself, right? Now, um, your risk reward is still going to be 300 million, so it's still positive, right? So it's like, yeah, you know. But yeah, I'm not off this type of sort which says that's all about that shit. I just read the charts for however participants are trading, like, and the facts that are presented in the information being the data of what prices trade, being reflective of the volume that goes through. But reinforcing Mark Douglas's principle, I mean, you can see here, you kind of can read the trajectory. I need to see the bars when they're quite close together though, so it's like this. So this is the open. Yeah, see, so 23, that's the open, and yeah, a bit of a wide spread, which is the difference between the best offer and best bid. So like the price closed here, and then the market shuts, and then it opens again. At it opened, it opened a bit before by the looks of it. Yeah. Oh no, it didn't. Actually, yeah, it did. Oh, when did this trade transact? Oh. Yeah, so this trade transacted before the market opened. That's a bit weird. Anyway, that's what this platform says anyway. Um, but then all this data could be comprised within one bar as well, which would be the daily bar. So it would show the open here, and it would actually be bullish right now because it's above the open, because it opened here. Yeah, it would be the low. Oh god, that's not that good, is it? But anyway, yeah. The thing is, yeah, ignore said that. um. Anyway, so yeah, you can see the trajectory. Okay, the waning interest of this upwards move too, which started to like, the thing is, I actually like the candlesticks better. So there we go. There's a bar close. That bar is pretty nice. So therefore, what I'm in essence saying is that the way participants traded, like within this 15M time period, is good for lower. So it's like, yeah. So it opened. So there was that. So it opened. Didn't open there. Oh, the fuck. Mm. Oh yeah. So I presume that there would have been, it was probably an algo or something, but like, oh no. So this trade looks like it was counted in the 11 to 11:15 time period. Anyway, I don't use this for anticipatory purposes. I just like to look at what intent is being exhibited and how that is directly making up the way the charts that I'm looking at and have been trained to look at in a certain specific way, being just analysing the intent participants exhibited with regard to how they traded, and comprise and made and dictated the way that the in-play ambush is set up, right? Um, so like, for example, I go to this. Yeah, well, it was looking pretty here, wasn't it? Now it's not really. but still, it's not looking pretty, of course, because we're in drawdown. But like it's okay. You know, it could easily come up to about here and would still be fine. But anyway, um, so we see the order flow that actually comprises that went through and made up the way that these bars formed, like, right? So it's like, you know, that bar that we just seen close right here, which on here closed bearish. Yeah, but oh yeah, see, so see how I said that this volume transacted at still within this time period, and this bar opened here. So yeah, no, like this looks like it's more accurate than for example this DX feed. Um, but anyway, it was still in it's still shown wick rejections after participants have consecutively traded in a particular in the same fashion over 15 time periods running, in a way that's facilitated an upwards push that is covered the same amount of prices as the previous and push and above the previous and pushes range high, and the intent that we're seeing uh, at this prices is of the sort that participants are starting to not be so inclined to continue trading with it the same way. But to be fair, even here, it just looks like the trading as they were down here. I don't really like these charts, I have to say. But anyway, so I'm going to cancel my subscription after this, and I've just bought it. But it's okay, it was only 70 quid. And you never know, we've got a month with it, so we'll probably come to some conclusions with it. But to be fair, I like to look at the charts as they are right here. So like for example, because I mean, if you looked at an order flow chart on a fucking 2 week chart, it would just be so sloppy. But it's all nicely like compacted into one bar of how participants had primarily traded like within that 2 week time period and contributed to the open high low close, which is all you really need to look at in bar candlestick format, of course. It just shows their interest on the 2 week time periods, right? And yes, you could see the actual order flow that makes up that chart, but it's like it's not really that useful in my opinion. Here's the Nasdaq. So these are 5-minute bars, I'm pretty sure. Oh no, they're not. The 15-minute bars. Yeah. So yeah, here we go again. You see the same thing, you know, opens here, this bar, and it closes right here. That's why it moves to here. And then this is how the market auctioned within this time period, and we see that primarily participants were willing buyers, and with the prices what were available on this occasion point in time here. Now you'll be able to see the trajectory of this push a bit better if you thingy the bars, zoom out your chart, and you see that even after this bar close, you can kind of make out the trajectory that the push is pushing in. Oh my goodness, so laggy, bloody hell. And like the way that participants are traded like within this at hand push, which would be the one that's in play because they traded to the downside, and then the way they traded like here suggested they weren't willing to continue selling anymore, which to be fair in my opinion would be better looked at within the way the bar closed, not the actual volume that traded, like, and then the way they traded like here suggests is intent that's exhibited, that's of the sort that shows that there's no signs that the participants are done trading in the same fashion here, which is again better analysed within this, because for all you know, with the volume dots, it could be just ready to topple over, and you could just like, nah, fuck that. I would not like to use this.